Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 18th of June, 2020. This is episode number 1779. Derivatives are not suitable for all investors. Past performance is not necessarily indicative of future results. First things first, for those of you who are trading energies, crude has moved to August. So we're rolling to August and quoting August starting today. The premium difference is 25 cents. It's in contango. Crude August is 25 cents higher than July. So all of your historical data needs to be moved up 25 cents to avoid the gap. So that's the first thing. The second thing is the market appears to be in a risk-off mode. We are trading pretty much across the board in the risk assets on the negative side. The DAX is the laggard today. The DAX is down 140 points or 1.13% on OK volume. The Russell follows. The Russell's down 15 and a half points, trading at 1409.20, down 1.09%. The Euro stocks come next, down 1%. The Dow is off 253 points. Dow futures or almost 1%, 0.97%, and the S&Ps are off 23 points or 0.74%. Gold is off $4.20, trading at 1731.40. And the Nasdaq's down 19 points, down 0.19%. DAX. The Nasdaq is the strongest of the bunch still. The bonds are up an entire handle, one handle and two ticks in the futures, September futures. The yen is up. The Bund is up 28 ticks. 28 ticks, and crude oil is up 8 cents. August crude is trading at 38.29, up 8 cents this morning. So as we stand here, we're coming in into a market that is leaning to the safety side, to the risk-off side. In terms of news, what's on the calendar and things like that, this morning we did get the all-important initial claims figures. Initial claims came in worse than expected for June, for this week, for the week of June 13th. Initial claims came in at 1.508 million, higher than the 1.15 million. Higher is worse. More jobless claims are worse, of course. Philly Fed came in very strong. The prior is negative 43.1. The current is plus 27.5. Huge swing there. The expectation was negative 22, so an upside surprise on that number. We have Fed's Mester at 12:15 p.m. today. The Bank of Canada's Chambry speaks at 1:30, and then we get the inflation rate this evening at 7:30 from Japan, year on year for May, expecting 0.3%. So for those of you trading the evening, pay attention to that. And that's where we stand this morning. Overall, just looking at what the market's all about, it says caution over an uptick in new coronavirus cases in parts of the U.S. and other economies weighed on Wall Street futures and European shares. In Asia, Japan's Nikkei ended lower. The dollar was little change against its rival currencies. Gold prices paired gains. Crude prices were up after U.S. oil product stocks shrank. Investors will closely watch the weekly jobless claims report due later today, and that came out, and it came out worse. And so that's where we stand this morning. Okay. In terms of review, let's get into our review segment. Let me just line up the charts here. Let's get into our review segment real quick. So what was expected yesterday? Here's what was expected. I was looking for the market to have an open auction. We were opening in range in value, most likely. I needed to pay particular attention to the 3130, 3128 area That is a low volume node. You can see it marked right here, the low volume node in a stock zone. And the expectation is we would likely see a reaction there, most likely push higher, take out the overnight high. The alternative is a push lower to take out the overnight low before testing the POC. So I was looking for the POC to be tested on scenario 2. Scenario 1 was really looking to continue the move up after this excess low was put in. This looked to me, based on the action on Tuesday, that prices below the 3080, the 3085 area, prices would be rejected, and it's likely to continue higher. So let's see what we expected. So again, pay attention to 30, 28, 30, 30, and then the 3107, and then the 3096.50. Those are the key areas. Below us, above us, it's the overnight high, the prior high, 3147, the overnight high, and 3160 above. What did we do? Here's what actually happened. The market ended up really following scenario 2, expanding the scale here. We had a very clear open auction, pretty choppy in the morning. And then we break lower and attempt to push higher, and then we finally get a strong impulse down. Tough trade here at the mid, one scale and a scratch, but ultimately, look what it did. It bounced right off of the point of control. We opened in range in value, so we expect to test the point of control with a high probability. And then what does it do next? If it does not hold the point of control, it is likely to aim for the value low, and that value low is around 98, and we push to 98 and a quarter, miss it by a tick before the bounce up. So we break the IB low, we test the value low, and so we have a full value range test yesterday, full value range test before it returns to the middle, chops around there for quite a bit into the European close, and then we end up turning up and pushing to 3130. Remember the 3130 28 area, that was resistance in the morning. 2850 was the IB. So right on point with the extremes here, and with the target, and then it tests that LVN again to give us a neutral day, and it goes all the way across, pokes through the value low, and closes the lower end of the range, but still inside the IB, so we have a neutral normal day. This gives us an idea. This tells us that the market is very much undecided, except that the delta was negative yesterday, finished off negative, even though we didn't really do all that much. The delta was solidly negative through the entire session, essentially. I mean, you could see it up here, the open. We remained below the open the entire session. We finished on a trend down in the delta. Let me show you what that looks like. This is the delta split between small, large, and very large. And pretty much all three pieces, other than early on, all three pieces were below the zero line with some accelerated delta selling, aggressive selling on the bid later in the session, giving us the fall, right? Giving us this fall, and we finish at the delta low for the session. Finish at the delta low. And to me, this is for a neutral day. This is the price action is neutral, but it's creating a more likely drift down. So as we come into the overnight session, we have the market open where it closed, but very, very weak test up, and then immediately it pokes down into 3064.50. Remember 3077 somewhere in here. Nope, somewhere in here. 3077 was important a little bit ago. Still is. And we pushed to 3064 before we started to rotate up. European markets open right here. You can see the little blip in volume when the European markets open. We test back up to the point of control, to yesterday's point of control, but come right off again. The profile overnight is quite Gaussian, completely balanced, but we're migrating that POC lower. We moved it up from the prior day session, but overall we're migrating the POC lower. Markets accepting lower prices in the 24-hour session is still accepting slightly higher prices in the day session. This is the day session here. This is RTH. This is RTH. The extended hours are much longer, and you can see the point of control shifting up just slightly, but really the market's in balance. Um, with yesterday trading inside of Tuesday's range, that big drop on news, and but really behaving kind of weak, having tested the IB low, then the IB high, and then coming back to the IB low to close with a weak delta. To me, that pushes to the short side most likely. So that's what we get from the overnight session. Volume still high again. It's rollover. Don't forget that tomorrow's quad witching Friday, expiration day. Um, Usually, statistically speaking, usually a good day to just go mow the lawn and go sightseeing and go for that big long bike ride in the morning. And in other words, don't sit in front of a screen tomorrow. Generally, not the best day to trade. There's a lot of delta hedging of options. In the futures, futures are used as they were intended for hedging, and it's a good day to get sloshed around. Also, calendar spreads continue to take precedence over outrights on a time basis. So it's kind of odd getting fills. Sometimes you'll start getting filled, let's say on a 20 lot. Sometimes you'll start to get filled and expect to be completed, and then someone steps in front of you. So it's just an odd time to not time to trade. Again, tomorrow, not such a shabby day to not trade. It's a good day to do homework and to stand aside, in my opinion. So let's look at CT Bookmap. CT Bookmap showing that there's just noise, a lot of noise everywhere. This is quite normal for expiration. You get these, oh, you get these liquidity pools that pop in and get traded out a lot. Remember, a lot of delta hedging and all that. You get a lot of this where people are positioning to roll, positioning to hedge. So there's a lot of noise here. I'm not seeing a clear edge either way in the market liquidity. To me, it appears as though the bids are um, more likely to get tagged today than the offers. The bids are just below the low at 30.60, and they continue on. Lots of bids underneath 30.50, 30.45, and so on and so forth. There's liquidity in the book that's just resting. Again, we don't know what the intention is, but this is characteristic of this week. It's just not the greatest week. Look, historically, in my trade metrics, and again, past performance is not necessarily indicative of future results, but historically, this has been the lowest return per unit of risk week traditionally. The four rollover weeks or expiration weeks have been, for my entire career in futures, have been higher risk, lower return. So overall, not the best business decision to trade these weeks. And generally, it's when I prefer to schedule vacations and trips and visits and things like that. So just pay attention tomorrow. Probably not the best day to trade. Okay. I want to do this quick thing here. Let's switch back to review for a moment. And, I tweeted out yesterday, and thank you all for liking and retweeting I do my best to share the best knowledge I have at the appropriate time, as opposed to just filling my Twitter feed with noise. I wrote markets giving you seizures and twitches. Can't tell what it's trying to do. Try this. Set your charts to a much higher time frame. Day traders might do 60-minute bars. Now maximize that chart. Now go to the other side of the room and look at it. What does it say? And this is what I'm showing here. This is a 60-minute bar chart, RTH, and it's a step back. This takes us back to mid-February. I'm not pulling data in before that. And it just gives us a chance to kind of see what we've been doing. You know, these are 60-minute bars, some of them spanning multiple days. These are 2 days here before it fell. And you can see it's trying to come back and finish filling the gap, and it cannot. And it's turning down. We can see that there's some support down below. It just becomes a lot easier. Look at the support here on that line. That support is basically the overnight low at 30.65. That's this line right here. When I'm doing my stock zones, I like to step out to 16 minutes. I like to step out a little bit higher and look at what the market is doing. Hang on, this has a timeout in it. I like to step out and look a little bit to a little bit higher time frame. And so if we take out the overnight low, it starts to put us back in the region of this rejection. It's a V bottom rejection. It starts to put us in that region, and it'll start causing a bit of a selling panic. The next level down, or the next area down, becomes this area here, which we tested right there, 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 there. It's just really good practice to step back, especially as part of your prep, and see where the market is really responding to things, right? And see what's in play. It just helps us to keep track of what the big picture is doing, versus getting caught up in our 1 minute, 3 minute bar charts, and so on and so forth. I really suggest that you do this. More importantly, if you have the time and your software has the capability, is to play these bars back at 64 times speed or something like that. Just play a 60-minute bar chart back and see how it formed over a couple of weeks, and you'll start to really intuitively. This is a really important exercise that my prop traders used to do all the time. You start to really intuitively develop a sense of where the market is headed, or what it's trying to do, and how easily it can push through certain areas, and how difficult a time it has retesting other areas. Okay, so that's the last thing I wanted to talk about. Let me just throw up this image here and switch to our. Just give me a second to switch my charts to the current action so we can do today's homework. Takes a second here to reload the data. There it is. A lot of stuff on this chart. Coming right up. All right, let's take a look at what's expected for today. So let's turn our stock zones on. Zoom in a little bit, and you can see these 2 days, very clear overlap here. We'll put a micro composite profile on these 2 days. We could see that the balance on these 2 days is at 31.15. That becomes a key area to watch right there, 31.15. But overall, the market's opening below yesterday's range, but inside of Thursday's. And where is it opening exactly? It is opening in the excess low, right here. And so we have this important, very, very important area to watch this morning. Because this box that I just drew here, it kind of looks like Darva's box or something. This box, what it does in this box is very important. If it attempts to retest yesterday's range, especially if it pushes into 30.98, this stock zone here, if it pushes into 30.98 and it fails to hold that, we are looking at the overnight low. We are looking at the MC point of control from from the last area that we were in. That would be 3056. So 3056 gets into play, and then we are looking straight down into 3037 as a target from about 3080. Okay, from 3087, 3037, that's 50 points. Pay attention to this, please. There's this box here. If it moves out of the excess and creates, for example, if it opens today and immediately on the open we have a strong impulse up, in other words, a drive out of this box, this excess stands. This means that the market still sees this as an excess, and shorts are toast. Are likely to be toast. And where would it go? Where would it go back to? It would go back to 3115, the MC point of control. That becomes the key equilibrium area. But if it attempts to push higher and it cannot, and it's struggling, it pokes through and it falls back in towards the open, then we're looking for a short. We're looking for a short on a pullback, and we're aiming for the overnight low to fill this 68 region, and we're aiming for that 56 next. 56, a little bit of turbulence there, and then 37 is the next likely key area to test. 37, right in here. Okay, right in here. You can see test here, test from above here, high volume node, a little bit of confluence across the board, and that becomes scenario one. Okay, so the idea here is to watch carefully to see how it treats this 94, 98 area. If it's not able to get out of this, escape that kind of reach terminal velocity or escape velocity, I should say, to get out of that gravitational pull of this area. If it's not able to do that, it is likely to come back down, and we're aiming for 3037. Okay, so 37 becomes, you want to hang in there, in my opinion, to your shorts. Keep your shorts on anyway, but hang in there for your shorts for an extended target, in my opinion, on a runner. Always cover risk first. The secondary is it makes an attempt to test this this excess low, potentially pushing the overnight low, and it's not able to, and we get another one of those V bottom, like kind of like this, these V bottom or these reversals, and it starts to push out of the box. Then we're looking at scenario two, testing 3115 as the key target, and then potentially starting to walk up to 3130, and that brings us back into the low volume node, the composite low volume node. And now we're back to yesterday's scenario one. Probably not going to get it today, but it's, starting to work its way back to 3160. Does that make sense? Do you understand the context and and what's underlying this? It's really important to understand what's underlying those ideas. The other scenarios are open test drives down or up, and so on and so forth. But we're in a gap, but we are gapping in this excess, and this creates a kind of a black and white situation, a clearly defined risk reward situation. Probably the only key trade of the day that's likely to set up, given that it's Thursday before expiration Friday. It is really late. We've been at this 24 minutes. I apologize for these videos getting long. There's a lot going on in the market. Good luck, and I'll catch you tomorrow. Don't forget to support EdgeClear. If you're at another brokerage, any brokerage that I was associated with or have ever talked about, dump them. Dump them. They're no good. Come to EdgeClear. Come join us, support us. We are building technology for traders, and we're looking to change the way traders look at trading and to trade more like prop traders than the classic online retail trader. I hate that term, retail trader. We prefer to call them online, self-directed professionals. Bring it on. EdgeClear.com. Take care.